households revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
And Fed policy will be driven by the pace of the data. Same policy will remain accommodative of the
Futures
mix
off,
of tools.
sessions low, still down about 1% on the day for a little more than 4 pennies.
All right, so
Okay,
welcome
so
everyone to the Playbook Checkup. And what we're doing right now is a special edition of the Playbook Checkup. One of our students and traders, David Croton, virtually will be joining us. David, I think it'd be great if you introduce yourself a little bit. Tell us how you came in contact with SMB. Tell us your experience with SMB. And then we'll sort of hear from you. But first, I just want to give an introduction to what we do here. So a couple of times a week, what we do is we hold the Playbook Checkup. This is a fun experience where we go over a particular setup that was made by somebody on our desk 90% of the time. In this case, it's somebody who trained with us and somebody who actually visited us in New York City, and we'll get a chance to hear from him, and you can judge whether or not he was trained well or whether or not we need to work on our training game. But we think we do a pretty good job. And so the whole purpose of this is to let traders find their strengths, help them to build from their strengths. They archive a setup in SMB template form, SMB playbook template form. There are variables to that template form, and it just sort of starts the process of getting the traders to understand what they do well, allowing them to take all this data out there in the marketplace and condense it into patterns. That's what we're trying to do, condense what we do into patterns, make traders see things as chunks of data that repeat themselves. So instead of thinking about winning or losing on a particular trade, they think about doing the right thing when they spot a particular chunk of data. And then, of course, every trade is a little bit different, but if you can outline 5 or 6 variables for your favorite setups, and there's only 1 or 2 things to be thinking about in real time, you've made tremendous progress in making better decisions, gaining confidence as a trader, and being able to improve your P&L. On that note, I am going to pass it over to David. David, why don't you tell us a little bit about yourself and how you're training and thoughts on that, and then let's get into the trade, okay?
Okay, sure. A quick background on myself. I've been trading for about, since the late 90s, but most of my work has been in automated arbitrage types of stuff. So I worked at a Canadian bank, and I was kind of hired as a programmer trader, and so kind of at the beginning of the automated trading systems and sort of rapid fire HFT type of thing before they gave it a name. That was kind of what I was doing. And so at that time, I was responsible for developing pairs trading strategies, and the bulk of the volume was doing a cross-border arb between Canada and the U.S. It was very good business, and also I helped out with my business, a guy who's my business partner right now, and he was the index arbitrager. We stayed there for a couple of years and split off on our own and continued to focus on automated trading strategies. And then over the last few years, I've looked around for other kinds of businesses. Nothing was quite as juicy, and very recently, I realized that I was going to need to start to pick up some new skills if I wanted to stay in this business. So I started looking at day trading probably a few months ago, and didn't really have much background in it at all.
We think that's
intraday trading. Sorry. Right.
By the media. I have to give a presentation at Pace University to college students, and I'm actually going to talk about the fact that day trading is a made-up worm, is a made-up word, and it's called intraday trading. But I keep losing the battle on that. Everybody calls it day trading, so I feel like maybe I just need to cave and just call it that. But and the reason why I make that a point of that is that we're just trading patterns. We're just trading short-term patterns, no different than a fundamental trader trades fundamental patterns, no different than a swing trader trades technical patterns, no different than a investor may invest with hopefully invest with patterns. Sorry to cut you off.
Right. No, not at all. I know we're not trading days, and I don't think it's such a pejorative, but I understand what you mean. At any rate, I started to hear about SMB from an employee partner a few months ago, and I started to dabble on the website and look at the blogs and stuff like that. And I started to drill down and try to figure out and became more serious with getting into this business. I started to realize how much information was being made available. I was, to be honest, shocked how much stuff you guys give away.
You should hear the conversations that Spencer has to me about the things that I actually post on the blog. Sometimes they're not so nice.
Yeah, well, listen, it's terrific. And so it's really, Mike, by reading your book, by reading both your books over vacation at the end of the summer, it really did provide a roadmap for developing trades that I've stuck to pretty religiously, and I've written up, I don't know, I try to write up several a day and spend quite a bit of time reviewing it. And, as you say, the trading itself during the day, especially when you're age, you kind of just forget it. And really, all of the learning happens when you go back and review it. So if I don't have time at the end of the day to go back and look again at what I've done and kind of look more closely at the patterns I was seeing and zoom in and out on the charts and stuff, then I find it's basically, the money I spent learning was really a waste.
Hey, David, can I ask you a question?
Yes, sure.
So, you said we share a bunch of stuff on the blog and certainly out there to the trading community, which we do. I think, and my argument to Steve is we probably only really share 5 to 10% of what we really teach in-house. And so I'd be interested, you actually spent a week with us. I think a special training program was developed for you, and you came in-house and spent the week with us. So I'm interested if you had some thoughts on how much you really think we do give away on the blog and in our webinars. And then secondly, the reason why we do give away a lot of free information is because we want to attract high-quality people. We believe just fundamentally in the idea of sharing, and if you do so when you put yourself out there, Dr. Steenberger wrote probably the best blog about this recently. If you put yourself out there and you share and you share and you share, you're going to meet people who you wouldn't have met beforehand, and you're going to get to work with traders who you didn't get a chance to work with beforehand. The privilege of training Shark and Pito and Swang and Memo and Nate and Chris and Ryan and all of the guys in our core and Fitz is that we put ourselves out there and they become attracted to that, and instead of training lesser quality people, we train the highest quality people. So from a business perspective, it works as well. But I'm interested in your thoughts. I mean, do you really think
Absolutely.
we shared?
I didn't say too much. I think the bigger picture of your business to me has if I could be so bold as to comment, has a few elements. It's the bigger picture is that it's we're part of a trading community, which is a new model, and it's a way for people to virtually sit on a trading desk when they aren't able to actually get a seat on a trading desk, and we all know what kind of a premium there is on actually getting a seat to work at a brokerage firm or to work at a hedge fund or something like that. So this really lowers the bar in a sense to entry. But at the same time, what it doesn't do is it does not by any means lower the bar, lower the difficulty level. So anybody can get a trading account, and there's vast resources on the internet, and SMB's resources, are for me by far the best. And listen, I'm still fairly new at this, but they're fantastic resources. And your question, sharing, is that really worth it? And I don't think that I don't think SMB loses anything at all by sharing, and I think that it's sort of. I agree with your point that by putting yourself out there, you are more likely to attract interesting people, and we're all in it to make money. It's a big component of it, but I also think that SMB represents the character of the people that are the partners and owners in it, and I think basically yourself and Steve, you're the guys that I interacted with most, are interested in pursuing this line of business, which means teaching people, helping people, learning with people, growing a business. That's not really everybody's cup of tea, and I think that's part of the motivation for you guys, because I'm sure you guys could make a living trading on your own, so obviously there's pleasure in it, and it had to be part of your goals, and you found that you enjoy this kind of stuff. So I don't see any negatives. I see only positives, and I don't think that there's any holding your cards close to your chest. Maybe that's, I say that because you think you're giving things away. The reality is, and I can tell you from my personal experience, that all the information in the world does not make you a good trader, and I'm sure you know that. The only thing that can, and I'm not there yet, I'm far from there, but I think the only thing that can produce a good trader is somebody who is like diabolically, motivated. I think you have to be extremely motivated and work a lot. And there was a guy, I can't remember who a guy who said that, I don't remember, a famous investor who said you could give guys tomorrow's newspaper and they still couldn't make money. So I think with your...
Paul Tudor Jones said that. And look, we love working with you. And I remember the first time meeting you, you had playbook trades ready to go that you've been working on that you could show me. And there's a lot of people who talk the talk, but you are certainly doing the work. And on that note, let's take a look at some of it.
Sure. Okay. So this is a trade that I did in Charter Communications a month ago. I still do these kinds of trades, but at the rate that I'm going at, I looked through a whole bunch of them, and I wanted to find some balance. I didn't want to find a loser to say why I didn't get it, and I didn't want to find one that was just, like an easy winner. So I tried to find somewhere in between, and I'm still in the learning process. So I chose this one. It's really a person who's learning doing a trade, and I called it the afternoon opening drive and pullback trade because it was, it was an afternoon catalyst, and I know some guys consider the afternoon, 2 o'clock, it's the new opening range, and it wasn't quite like that, but it was really in a sense a new day, and I wanted to give it a title that might be kind of a little bit more interesting, or hopefully it was. But yeah, so it's from Charter Communications from January 27th. I'll leave this up briefly for people to peruse. Hopefully people are quick readers. All done. Okay. So big picture in the trade was, one of the things that we're dealing with right now in terms of entertainment and content providers and internet-based streaming. And what it was really all about was that Netflix, primarily Netflix, was making a lot of the content, was making some of the traditional media providers a little bit nervous. And the online streaming and the content providers are squeezing the cable operators. So Comcast and Charter were looking to consolidate through an acquisition of Time Warner, and I believe what had happened was Charter approached Time Warner, kind of got the cold shoulder for a few months. I don't even think they wanted to speak with them. And the original idea was that Charter, which is interestingly a puny company compared to Comcast and Time Warner, was interested in purchasing them, Time Warner, and then peeling off some strategic pieces to Comcast. I think they were all discussing it together. And in January, Charter offered $132 cash in stock for Time Warner, who rejected it right away, and they thought 160 was the right number. And I looked into it a little bit, and it turns out that the speculation had been priced in somewhat, and Time Warner shareholders had already benefited. And I think we're supportive of the idea of the deal. So on the day of, Charter comes in and gets aggressive, talks about a proxy battle by a replacement of some of the Time Warner directors that would be a little bit more sympathetic to the deal to get the deal done, and then the race was on. The stock info, the average true range is about $2.50, average daily volume 800,000 shares or so. On the day of, it traded quite a bit, 4.5 times the volume, and there was about a 10% short float at the time.
So there's a news catalyst.
That was the catalyst. Was the news. Okay, so just having a look at what the S&P was doing at the time. I have a slide later just to show that the S&P didn't factor in so much into support and resistance levels during the day because it was fairly sleepy during the day, and there's one slide in there that we can look at that. At any rate, we'd had the run up to 185, the pullback back to around 178, and then there was this support here, all the way back up here, and we were just into this kind of pullback at the time. I'm just going to grab my slides so I can see this a little better because I'm using a laptop. It's a bit hard to see. Right, okay, so on the daily, Charter kind of run up into about 138.5. So that was kind of a resistance level. It looked like it was getting into the breakout on the daily at the time. The 30-minute, I'm just going to, the next slide here. On the 30-minute, there were any number of interesting levels and I just highlighted the ones that ended up playing out somewhat during the day. Easy to say in hindsight, but I just wanted to show what those ones were. And then just to give some perspective of what happened pre-catalyst and then the action after the catalyst, just to give some kind of perspective of the kind of movement that we had. With an average true range of $2.50, you can see that on the 27th, we'd opened about 1.5 and made it up to 134. So we'd actually already had, a full move that day, and it come in before the action started. I did a separate slide because the slide gets a little bit crowded when I talk about the trade management. But I did a separate slide just to show, so it would be a little bit easier to see the areas where I ended up trying to get involved in the trade. So after the run up, there, I focused on looking for tight consolidations to get involved, and primarily, I believe, and you can correct me, it's just easier to define your risk below a smaller range. It doesn't necessarily mean it's not going to go below it, or that this isn't the right level, or this isn't the right level. It's one of the things I struggle with. I'm not exactly sure. I guess you just have to pick your choice and your time frame and how far you think it's going to go, and just try to set up your risk reward properly. But everything else being equal, I try to.
I like using consolidation periods like that because it's easier to control your risk. It's easier for you to identify what your risk is. And
Right.
and then just also when things get tighter, that tends to be a catalyst, an intraday catalyst, as there's this battle going on, and as it gets tighter and tighter and tighter, the consolidation area, somebody's going to lose. And
Yeah, you can see the players coming together head to head at that point. At any rate, that's a practice that I make. I find that trying to trade in here, unless you're trying to trade a range, is a lot harder, and I find I personally get chopped up a lot. So these are the areas where I attempted entries. There's the run that we had. This is another area. Again, that's just because the things get a little bit messy when I try to show what I did. I also wanted to show demonstrate that that it was. I mean, it's hard to say. What am I trying to say? There was obviously a lot of them happening, but what I wanted to show was that that Charter was not really moving with the market whatsoever. And I tend to put the S&P above whatever I'm trading so that I can see, support and resistance levels. And so you could possibly argue, here, I mean, you can see on the scale percentage move during the day, the S&P is basically going sideways. So in terms of support and resistance levels on the S&P, it didn't really play out enormously. It wasn't a big factor. It was really trading independently of the S&P.
Yeah, I mean, we're looking for stocks with independent order flow. That's a great example. We want things that are stronger than the market or weaker than the market and that are trending.
Right. So, and then this is the meat of it, the actual trade. So after the move up, I really do try to find to get into this. I mean, this is really my favorite kind of trade where you see something have a good strong move up and then it kind of pulls back and kind of hangs around for a while. And it did that, for about. I mean, it was a little choppy in here, but it kind of settled in after about 15 minutes of this big gap up. It pulled in, and it just didn't go any lower. It was just kind of holding in there.
Can you go back to your longer term charts? Like, what's the longer term level that's most significant to you? And then, secondly, on a scale of 1 to 10, how important would you rate that level?
Well, the most important level would be the 138.30, which is the level, and I would say that was a very important level. I mean, I would give it, a 7 or an 8 because it was pretty much a side. Let me go back to that slide and show you what I mean. Give me a second here. That's not it. There we go. So, one of the things that Steve talks about a lot and that I use is basically looking at the 30-minute from the last week or two and just trying to find the places where the major support and resistance levels. And on this chart, to me, aside from this wick, which is a significant wick, the 138.30 seemed to be the most important level. If you count the wick, then I would say it was the 130.190, but this one's pretty close to it as well. And this seems to be where where things came back down, and this one's kind of close to it. So, it's not so specific. I mean, it's this range here. It's $140 stock, so plus or minus 75 cents means that this is the area. And I don't know if 138.31 is, if you want to pin a tremendous amount of importance on that price level. It's this area. So, that's basically it. So I would say, if I had to pick a number, it would be this one here, which is why I highlighted it. And I would say, I would give it a 7 or 8. I would say it's a very important level. And yeah, that's my view on that.
Okay, great. So I guess, what's going to be my question then? So why did I ask that question?
Well, it would be an area where I would be looking at for actually the 139.25 did end up hitting right at that wick. I'm not sure. I mean, it's areas above and below which you're going to make decisions. If it holds above it, above that variable level, it means it's broken out above the major resistance, and you might want to be, if you're thinking of continuing to trade it, you would want to, if that was the right level, you would want to say to yourself, okay, well, if it holds above that level, then that's an area that you might want to get long for continuation if it's not too stretched out during the day, or you would like to see it consolidate up there for the next leg higher. Or if it was, the converse, if it's 138.30 or whatever it was the correct level, and it couldn't get above it, then it was holding below it, as it kind of did at the end of the day after all this, all this craziness here. Then that's an area that you might want to try to get short.
Yeah. So let me try and be more specific with my question. So you have a longer term resistance level at 138.30. I agree that's a level. I'm not sure I agree it's a 7 or 8. I think it's probably more a 5 or 6.
Okay.
It's not clean enough for me to be a 7 or an 8. It's not important enough. but it doesn't matter how I judge it. It's important that you're taking the time to judge levels and you get more experience.
Right.
Finding levels are important to you. But,
Okay.
A question I would have for you is, so the chart looks great on an intraday basis, right? And so this is a hot looking chart. This is a supermodel-ish looking chart, right, on an intraday basis? You want to find more charts that look like this?
Yeah, this is the best. I mean, these are the ones that you want to find as many as possible of.
Yeah. But when I take a look at my longer term chart, I've got resistance at 138.30. And so is it worth it to be buying that consolidation area on an intraday chart that looks really, really hot when you've got resistance $1.30 away and a $138 stock? Thoughts on that?
Sure. I guess it's the time frame. So I didn't really plan on holding it very long. It was a very short-term trade. I'm not really in the business of swinging anything so far, but in that sense, yeah, unless
So
it
if you were
was...
going to be wrong, where were you going to hit out of that stock?
That's a good question. In fact, I basically trailed my stops I didn't trail them, but I pieced it out as we went. So that's a good question. It's something that I struggle with. I mean, in terms of being wrong, I enter trades and I immediately decide where I'm wrong by entering my stop. Except sometimes on like very volatile fade trades, I might give it a little bit of time. For example, like the PEIX today that hit $15. I went and if I would have been looking at it 14, I might have tried 14, but I tried 15. And I didn't really, put a stop. I wanted to see how it behaved there first. But with this, when you see this clear consolidation here, I probably gave it a quarter or something like that. So I'm wrong after a quarter is my answer in that sense. It wasn't a trade that I thought was going to. I saw this explosive move up, and my feeling was, pitch it. Just it was a gift, and drive on. And then when it came back and it started to do this. I was very dubious about it. I thought, if there was another big amount of volume that came in, maybe it could push through this level here. So I just put a quarter position on there just to give it a shot, and that failed. And I don't regret trading it small because I had much less confidence in it. But you do see times where things consolidate, and then a level is a level, but if there's enough buying pressure, then that level gets obliterated. So I went small though because I was dubious about it as well. Does that answer your question?
Yeah, I just want you thinking about, is it worth it for you to buy that when there's overhead resistance a point from your entry?
Yeah, definitely, and that's why I was aggressive with my profit taking. I was almost out of everything here, and my plan is, and I wrote this up here, new strategy target on 70. The trade is for me that risking 25 cents, and I don't know if that's enough for this kind of stock, but for a move back up to the highs, I'm out of 3/4 of it. Is my plan, is how I do it now, unless it's a really vertical move. And then what I do is I take a little piece in case lightning strikes and there is a new rush of buyers. So definitely I'm looking at I'm definitely looking at risk reward, and I see it as tight consolidation. Maybe I can risk 25 cents for an upside possible move of the highs. That's really the way I saw it. So I considered it a 1 to 4 trade, something like that, which is something that I'm interested in. And then above and beyond that, things do get silly sometimes, but I'd gotten rid of most of it by the time we got there, and that was really the trade in the first place. It was, I don't go into something until I've decided what my risk is and how far I think it can go. In terms of being able to sit through to get to the target, that's another story. But
okay, great. I like that.
And then I have a few thoughts. I usually go back and spend time on as many trades as I can every day, trying to learn lessons from them and figure out what I'd like to do better next time or what I did right. And usually I'm reviewing the mistakes I made. But in this case, and this is something that I sometimes it's easy to do and sometimes it's hard to do. But generally on these pullback trades, I think you really just got to try to hang in there until you get back. And at the same time, on this one, these moves, 50 cents, 75 cents, 50 cents, and then $1.25 or another $1.50. It's hard not to take partials on when you have those kind of dollar moves. So there are other trades where when the target is 50 cents away and it's kind of steadily chugging along, like a JCP or something like that, or the stock is trading at SDRL, which trends really nicely. It's easier to sit through those. At any rate, that's one of those things, is to try to stick, longer term. How do the numbers work out? Does it make more sense to always hold on to it? Do you make more money over 1,000 trades by holding it and letting it go back to your target on the pullback trade for 3/4 of the position, or do you make more money by taking partials and having more risk management? And I haven't done the analysis. I'm not sure how to do the analysis to go and do that, but I know that I've talked with other people and they recommend longer term, that the better idea, I guess, in this kind of market, that's the idea, is to hold it, longer.
Okay. Great. Let me
And
just give a little feedback. So I would have bought this as well. I'm only going to buy that if I really love the consolidation, meaning I really need to be able to control my risk into that consolidation. I'm only going to buy this if the consolidation's tight and I can see where my exit is and I can really control my risk reward very well there because of that overhanging resistance. But if the consolidation is as nice looking as it is there and you have a news catalyst behind it, which we did, then I would actually buy into the consolidation. I certainly think this is an easier trade above 138.28. I would be taking off. I would be lightening up in front of 138.30, 28, 138.30, that area. And if it held above it, I'd probably put some back on. I absolutely would have bought back into that 138.28 area like you did. I absolutely would have done that.
Right.
Okay,
that's interesting.
I would be surprised. I mean, it didn't work out, but I actually like that. I may like that trade more than any of the trades. Although the way it actually goes back to that 138.28 area is a little bit slow. It would have been better if it was steeper to that support level, 138.28. So resistance comes support. It blows through that 138.28-ish area, which was our longer term level. Has a pretty good up move for a $140 stock, but not great. And then pulls back. It pulls back a little bit too slow for my taste. It's a little bit too controlled for me, and it certainly. I would like to see it push away very quickly from that price, which it did a little bit, I guess, a couple of times.
So I'm. Go ahead. Sorry.
No, go ahead.
I've got a couple of questions, but okay, sure. So I'd like to ask you. So in terms of your risk, you were, if you were watching this consolidation here, where would your risk be?
Below the bottom of that consolidation.
Okay, so comparable. And then.
Yeah, there's no point in holding.
Or would you?
Yeah, there's no point in holding that. It's anywhere. If it's going to be good, it shouldn't get below the bottom of that consolidation.
Right. Fair enough. So actually, I didn't even go describe how I actually did the trade, and it was I wanted just to point out that I did try it here, and I did get stopped out on the first shot. The second one, this is typical of me. I bid for it here, and I only gave it a dime. Which is basically meant that I probably put my stop in a little bit lower than the first one, which a dime didn't really make any sense. And then the third one, I said, screw it, I'm not chasing it, and I bid behind and got filled on the wick. So it was kind of lucky that I actually got a piece of it. And then I actually like doing more and more of this, of bidding behind when it looks like it's, could go your way. I like the idea of trying to get immediately 10 cents or 15 cents on side. It makes it much easier than buying this kind of thing or chasing it up, which also has its benefits. But I'm partial to doing this right now. So point is actually took 3 tries before I actually got a hold of it. Anyway, I just want to that was interesting. So when you're talking about this, you basically think this is just kind of deflating. And so if it went down here, you would have liked to have seen it fall down and then powerful buying come up back again.
Yes.
To make it interesting for you.
When something is a true technical level, it comes towards that price and pushes away. It rejects that price dramatically. So the stock will be coming down to 138.28 and with a certain rhythm to it, and then all of a sudden, bam, it'll pop. It'll pop very, very strongly from that technical level. That's a very
Right, I'm
common.
familiar with that.
Okay, sure.
Yeah, and sometimes I go bid again at those levels. How would you get involved if it did have a good, bounce off of 138.25 and say bounced 50 cents? Would you go bid at time or 138.35, or how would you look to get involved again?
Yeah, that becomes a little bit too inside baseball, but the easy way for developing traders is that that would be a place where you would think about adding to your swing position. So it's up to you as to how much you take off at the top, but as it pulls into that 128.28, you got to buy that 138.20. You got to buy into that. So I'm going to start to piece into a bigger swing position. I'm not going to wait till it comes definitely to 138.28. I'm going to buy a little bit before, and I'll sort of piece into it as it pulls into that price. And this is very, very insider baseball, but I mean, I use a technique, and I was talking to Deb about this morning, where I improve my price. So it depends on when I start buying the stock, and it depends on how much I buy. But I mean, essentially, I'm going to try and make the spread and improve my price off of this 138.28 while also increasing my swing position. So I'll make some cash flow just making the spread off of this 138.28. I'll improve my price so that I'm now marked at 138, probably 30-ish. For a bigger swing position, I'm going to hit that below 138. I'm probably going to get flat below 138 as well. I might get flat below 137.74 depending on the way the stock moves. But yeah, I'm going to start to buy probably 138.50, maybe a little bit in front of there. I'll just sort of scale into it, into that 28-ish area. If I get it at prices that are too expensive, then I start to improve my price, and then I increase my swing position. Does that make sense? Or is that too insider baseball?
Oh, absolutely. No, not at all. That's exactly my question. It's
I'm going to buy like 51 cents, 41 cents, 36 cents, 33 cents, 31 cents. I'm just going to be bidding there. If I get too much, it goes and it pops up to like 69 cents. I'm going to take some off there. Definitely take some off 79 cents. And I'm really going to trade it very aggressively and very actively, so that I'm improving my price and also increasing my swing position. And what happens with that, David, is that you end up in a situation where you're going to make cash flow by making the spread from that support level, and you're going to get bigger. And it's not going to matter. It'd be better if the trade works, but even if the trade doesn't work, you're still going to make money because you're going to make the spread a bunch of times from the support level, and you're going to book a quick $300-400 the way that I trade, and then you're going to have a bigger swing.
Some good size.
If it doesn't work out, it's not really that big of a deal.
No, I agree. That's exactly that's something that I'm working on, and that's why I have Next Steps Cash Flow, which is to do exactly what you're talking about.
Trading, and I'm actually almost.
No, I realize.
I'm hesitant to even bring it up.
You got it. Okay, fair enough. It is one, like Steve said. I was talking to Steve last week or 2 weeks ago when I was there, and he said, that's really for advanced traders. But it is something that I'm plugging away at, and with some success. But
yeah, I mean, the answer for most traders is you just want to sort of buy more as it pulls into that level, get bigger, and then hold, thinking of a next up move, a next swing up move.
Right.
Okay, great. Well, this has been fun, and thanks for.
That was excellent.
We got a question. Given the catalyst and the move from 132, I would like the resistance above because the resistance often hides stops. You seem to disagree with that. Could you go into this a bit, Mike? Given the catalyst, I can't read what you wrote here. I would like the resistance above. I'm not sure I understand the question. Not sure I understand the question. Given the catalyst, once it goes through it, then moves fast. The resistance above. I'm not sure I understand. I'm not sure I understand your question. Anyway, so look, this has been fun. You can shoot me a direct email, and I'll try and I'll try and answer your question. I'm not understanding it right now, but shoot me an email to mbellafury. I'll put my email in here, and I will try and answer it. But David, thanks for coming. I hope it's not too cold there in Canada. It's cold here. It's freezing.
Really? Yeah.
But very good job here. And
Thank you very much. Thanks for the opportunity. It was great.
Keep working on your game, and we'll talk to you soon.
Okay, take care.
All right, thanks, guys.
Hi, I'm Mike Bellafiore, author of The Playbook and One Good Trade, co-founder of SMBU and SMB Capital here in New York City. If you want to learn more about SMB, please go check out smbu.com. Check out our blog where we share tons of trading tips, trading stories, trades we're in, trading anecdotes, and also take the time to sign up for our 10-day free training program, which we offer to the trading community at smbu.com. We hope you enjoy it. We hope to see you on the site. Trade well.